Last week was one of the craziest weeks I've ever seen in the stock market. The stock market had its worst 2 days in history, and then immediately afterwards had the single largest gain in 16 years. So here's what happened. Donald Trump declared a national emergency due to the United States' growing trade deficit. The administration then imposed tariffs on all of its trading partners in an effort to reduce this trade deficit. Trade deficit happens when a country imports more goods than it exports. Let's take a step back for a second. Trump's political ideology is America first. He basically ran his presidential campaigns on this idea of protecting American interests in trade, foreign policy, and domestic issues. And it's rooted in prioritizing American workers in terms of business and security over global commitments.
A new vision will govern our land. It's going to be only America first. Buy American and hire American.
And the new tariff policy imposed by the Trump administration is a clear reflection of this America First agenda. So let's break down the tariff policy and what exactly happened. On April 2nd, also known as Liberation Day, Trump imposed a 10% tariff on all of its trading partners, and additional tariffs were imposed on those trading partners that previously had tariffs against the US. The Trump administration used this formula to calculate the tariff percentage for each country. There are a lot of countries that the tariffs affect, but I'm going to talk about the main ones. The US now has a 25% tariff on Canadian and Mexican goods, 20% on the European Union, and initially 34% on China. But that changed, and I'll talk more about that in a bit. These tariffs are supposed to be reciprocal, which in this context means you tariff us, we tariff you back. That is supposed to be the nature of these new tariffs as advertised by the Trump administration. So the strange thing about these tariffs is that they also apply to countries that don't even have a tariff on the US. So take for example Singapore. The United States and Singapore have had a free trade agreement since 2003. So this means for a long time there have been no tariffs on goods sold between the two countries. And to add to that, the US actually runs a trade surplus with Singapore, which means the US sells way more to Singapore than what Singapore sells to them. But keep in mind, Trump's tariff policy is to reduce the trade deficit with its partners. But in this case, it's Singapore who actually runs a trade deficit with the US. And quite understandably so, right? Because the United States is a much bigger market than Singapore. Despite this, Trump's new tariff policy still imposes a 10% tariff on Singapore, which just contradicts the very nature of the tariff, which is supposed to be reciprocal and to reduce the trade deficit. This shows that it's more than just about reciprocal tariffs. The Trump administration is sending a clear and strong message to the rest of the world that the age of American free trade and globalization is over, and that America will no longer be as liberal with its trade policies as it has been for the past many decades. So the following days after these tariffs went into effect, the global markets tanked. The S&P 500 fell over 12%, and trillions of dollars of value was wiped out from the market. Now, not long after the tariffs came into effect, a lot of countries started to express interest in negotiating with the US to come to a deal. And that is exactly what Trump wants. And while all of this was happening, something interesting was happening in the bond market. People started to sell their bonds in mass, which caused yields to skyrocket. Now, this basically leads to higher interest on new loans issued by the US government, making it expensive to borrow money, and the US economy runs on borrowed money. Now this puts incredible pressure on the United States, which is already in a lot of debt. To add to this, the 10-2 Treasury yield, which is basically the difference between the 10-year Treasury yield and the 2-year Treasury yield, which has been a reliable indicator of a recession, actually rose to over 0.6%. Which basically points to a recession happening. Because of this growing risk of a recession and the fact that many countries were interested in coming to negotiations with the US, Trump imposed a 90-day pause on all tariffs and reduced all tariffs to 10%. Immediately after this news came out, markets exploded. Like I've literally never seen anything like it. The Dow Jones Index had its best day in its history. The S&P 500 closed at over 10% in one day, which is the best it has done ever since 2008. This 90-day pause applies to all countries except one. One country did what nobody else did and retaliated with even more tariffs against the US.
Now, China says it will raise tariffs on US goods to 125% in an escalation of the trade war between the world's two biggest economies.
So this triggered a huge back and forth with Trump increasing tariffs and China increasing tariffs and Trump increasing his again. And fast forward to today, what was initially supposed to be a 34% tariff on Chinese goods now sits at 145%. And China, on the other hand, has a 125% tariff on all US goods. This basically puts business between the two countries in a very bad position. Just take a moment to think about what happens to the price of iPhones coming into the US after being produced in the Chinese factories. And of course, this is not sustainable. America needs Chinese business. Because the truth is, China over the past 20 or so years has grown to be the king of manufacturing, and they're regarded as the world's factory. They have mastered the manufacturing process, and they have an unbelievable amount of highly skilled, hardworking, and most importantly, cheap labor that is able to produce high quality goods at a low cost. Now, Trump wants to bring this locally to the US. He wants manufacturing to be done in the US. But the truth is, American labor is expensive, and quite frankly, their expertise is elsewhere. See, Americans are good at technology, at engineering, at innovation and entertainment. It will take many, many years for America to be able to replicate the Chinese manufacturing capability on their own soil. Now, obviously, Trump's tariff policy is part of some kind of negotiating strategy, which we don't know if it's a good strategy or not until this whole thing plays out in the coming weeks and months. Ideally, all countries come to the negotiating table with the US and makes deals that is beneficial to both parties and overall tariffs come down. So what does this mean for us as investors in the stock market, especially in the US stock market? This whole trade war is an incredibly volatile environment. It's basically impossible to predict what's going to happen next, as we've clearly seen in the past week. It's very, very difficult to time the market in these kind of situations. So the only logical thing to do is to remain conservative and watch what happens carefully. Hold off on any leverage, and if you're going to invest for the long term, because in the short term, we don't know what's going to happen next. At least until there's a path forward that doesn't involve annihilation of the global economy. Well, that's it for this video. So all the best with your investments. Maybe I'll make another video soon.